This podcast is for informational purposes only. Please speak to a qualified tax professional about your specific circumstances before acting upon any of the information provided.
Hello and welcome to episode 4 of Crypto Tax Sucks. This one is all about compliance, and we're getting into the details of how to stay on top of your taxes, how to avoid brown letters hitting your doorstep, and what to do if you do get a brown letter hitting your doorstep from a tax authority. Just to backtrack quickly, on episode 3 we covered off NFTs, and we're joined by Ben Lee from PKF Francis Clark, and also Andy Gray from Known Origin, which is an NFT marketplace. We talked about things like trading NFTs against Ethereum and how that can impact your tax position, and also what happens if your NFTs are stolen. What can you do in terms of write-offs, if anything? This episode, as I mentioned, is all about compliance, and I can't imagine having a better guest on than who we've got today. So we've got Dion Seymour, who is Digital Asset Technical Director at Andersen in the UK. And Dion also previously worked at HMRC as Policy and Product Owner for Crypto Assets. So welcome to the podcast, Dion. How are you doing?
I'm fine, thank you, Dan, and thank you very much for having me here.
Absolute pleasure to have you on. It'd be great to hear a little bit about your story in crypto and how you got started in the industry. Okay,
no problem. So it's an interesting origin story, and just going to highlight very quickly, the blog actually has a link to the Andersen blog, so the recap blog that's come out about the letters. It has a link to the Andersen blog, which has a bit of my origin story, but I have been asked a few times, how, particularly in the HMRC and elsewhere, how did I get involved in it? And I'm afraid to say, I actually spent nearly 18 years in HMRC, and I did quite a variety of roles. But with that one, it all comes down to, like most things in HMRC, availability. So I joined a team that had oversight of crypto assets. And as I didn't have a full caseload at that particular point in time, it also made me end up with the role of the Brexit coordinator, which was not Brexit, EU exit, clearly as the government prefers to call it, Brexit coordinator. I got the Brexit coordination role because I was the only person in on one Friday afternoon, and they're looking for someone to take the responsibility for aspects that need to be done on Monday. So then a month later, I'm in on a Friday afternoon, and the previous incumbent had decided to leave the team and go to a dedicated Brexit role, I think probably rather than deal with the crypto, because crypto was exploding at that time. And I ended up getting the crypto lead on that. I did have some understanding of Bitcoin beforehand. I've been loosely involved in some of the discussions that have been happening to the team around that point, and particularly around, is it money at that kind of point? And so it did make me a bit more of a natural fit for the role. But it was definitely much more luck than judgment. But such is the HMRC way. Granted, quite often you do have to make your own luck anyway. So I then ended up with this new role in policy. 2017 peak was still dominating the headlines. HMRC was still seeing things like, back in those days, Brexit, Trump, and Bitcoin were all the main things that the press were having. It was quite a baptism of fire. So then it's getting up to speed on understanding crypto far better, how that actually overlaid with tax, because you then end up having to speak to a whole host of individuals across HMRC, and quite often my days were just taken up with meeting after meeting after meeting. It was challenging to say the least. But by the end of it, I was pretty much the only person in the HMRC working full time on crypto. There are other people who do the aspect of crypto, but they would have other elements to their work as well. Mine was just full 100% crypto, which then also meant that as the industry continued to develop from 2017 and 18, 19, 20 and so on, I was firmly involved keeping up to date with the news, discussing with people what does this actually mean. And as much as you may or may not like the HMRC guidance, that was, I still think, one of the most detailed that's been released by any tax administration. The first guidance came out in 2014, but when we put out the policy papers in 2018, 2019, the manual in 2021, the update to the manual with the D5 section in 2022, we're still touching topics that no other tax administration has wanted to touch. So whether you like DeFi or not, the fact that we've actually come out with a position gives at least some certainty as opposed to other jurisdictions where they just haven't said anything. I think HMRC has been one of the most forward tax administrations in the world on crypto, through a lot of the efforts I was doing whilst I was there.
Cool. Thank you for your story. I can now see that you've gone from suit to hoodie, so you're now very much entrenched in the industry. And I'd like to get your perspective. You're now outside of HMRC. You're now working for an accountancy firm. I know HMRC has to remain neutral to the industry, but yourself, I mean, are you a crypto bull, bear? Are you kind of neutral? How do you feel about crypto as a technology?
Okay, so yeah, I've put the waistcoat down for today. I've put the uniform from the hoodie because that's what seemed to be everyone else wearing in your previous Tax Sucks webinar. So I thought that was the attire which was expected today. My position on crypto actually does surprise some people. I do own crypto. I have invested in crypto way back in early 2017, but I am sorry. I'm much more neutral about crypto. I wouldn't necessarily say I'm bullish. It's going to develop and take over the world. It really has evolved and changed remarkably over the years, and it's really interesting, really exciting to be involved in a lot of those projects and those topics. And you can see how it can take over, but I've often been a bit more tempered because you've often seen how it can also fail as well. And so not everything that we've seen with crypto has taken off. Not all of it has been a great innovation. And so in that sense, I think sometimes you just have to be a bit more, okay, what does this actually mean? How does it actually improve? What does it actually do? But that is also then, I feel, helped a lot when I was in HMRC, when some people were saying, why don't we just ban it? Can't we just get rid of this? This is the only thing. The only people who use this is criminals, and so a lot of people saw me as being a crypto positive person because I was purely pointing out actually, criminals can use a whole host of different ways to actually circumvent laws anyway, not just crypto. There are different ways to do it, and to say that the technology in itself is criminal because criminals use it is, in my mind, definitely not the correct approach. Offshore bank accounts can be used in the same way. Offshore vehicles can be used in the same way. Doesn't mean that everyone who has them is actually, doing no good. It comes down to the fact that actually how some people use the technology shouldn't be indicative about people's perception of the technology.
Cool. Yeah, some good points there. One thing that I'm really, really keen to ask you, and it's what I ask all of the accountants and tax advisors on here, is do you think crypto tax sucks? Particularly from a UK perspective. You mentioned that there's, UK are probably world leading in terms of guidance that you've put out there. I, for one, was very thankful to get that guidance as we create crypto tax software, and it's kind of critical that we've got a good understanding of how things should work from a tax perspective. And it was great to understand that, a lot of our early understanding did align with the guidance as well. So I think that's a positive thing. And I think, as you mentioned as well, there is DeFi guidance out there now, and a lot of people have taken that they've taken a very negative opinion of that. But it does allow for us to maybe engage with HMRC, and we've certainly done that through Crypto UK, in terms that, it'd be great to have some change. Maybe we want some parity with other financial products or financial asset classes that have carve-outs. and we've got the opportunity for change because we have that clarity. So yeah, let's just jump in with, do you think crypto tax sucks in the UK, or do you think we're actually, as you mentioned, we're actually in quite a good position?
A lot to unpack there. Does anyone like tax? That's maybe the first question before we worry about crypto tax. Not that there's such a thing as crypto tax. I always love when people talk about crypto tax. It's just tax. So personally speaking, I like tax, but I like it for the fact that it's what actually helps our schools, our hospitals, our general society operate. I'm not going to get into political aspects as to whether it's spent correctly or not, but fundamentally, the funding that goes to all the social care and provisions that we actually have in the UK all have to come from somewhere. And that money has to come from fundamentally taxes if we want the NHS not to be privatised in that sense. And rightly or wrongly, I think there is a place for tax to actually exist. Now, whether crypto should be taxed or not, I think it should have parity with other asset classes. And what you're actually looking at here is it is being treated in very much the same way as many of the other asset classes. Perhaps it's being treated closer to shares almost, and it's clearly not a security in that regard as a share than anything else. And that's partly the way because it's not fitting some of the criteria of being a security, for all crypto assets. And obviously, the different types of crypto assets out there have got very different attributes. It is just that whole umbrella term that's used. Now, how that actually then implements through legislation is really quite tricky. And the approach taken, which was, in my mind, the most sensible approach, was to apply existing tax law as it stands. Now, unlike people's comments that HMRC's guidance created the DeFi law, HMRC's guidance cannot and does not create law. Parliament creates law. They are the ones who actually put it into the statute books. If it's not in the statute book, it's not law. So what we're actually looking at with the implementation or the publication of the DeFi guidance, we're showing how tax law is implemented based upon what you're already looking at. Now, tax law will fundamentally exist regardless, there's regulation or not. People often say, how do you tax something that's not regulated? Well, it doesn't need to be regulated to be taxed. It will exist in that framework regardless. So the guidance was there to give clarity, to give certainty as to what HMRC's view of it was. Even if you took that guidance away, wouldn't actually change the position of what the view of the law would actually be. In some senses, it was definitely not seen as a positive aspect putting the guidance out there. But the other outcome would have been not telling anyone, letting them have investigations and telling them this is the outcome. Just because it's not in guidance doesn't mean it's not in the law, as I kind of go through. So what you would have had is your customers who file their tax returns not necessarily realize they're getting it wrong, but getting it wrong nonetheless, because it doesn't matter if it's in the guidance or not, it still would be the law. And this is where I think people kind of missed the point. Putting the guidance out there should have been almost seen as a positive, because it's actually a jurisdiction that has come out and said in detail what the position was. Norway were the first tax administration to actually get guidance out there, and they have a very similar view. And my conversations with a number of other tax administrations around the world also have very similar views to HMRC, but people didn't want to say it. Now, how can you actually change the law if you don't understand what the law is? And this comes back to your point about trying to engage with HMRC. If we hadn't put that position out, people wouldn't necessarily have known what the view is, and then that actually then provides that point where you can actually have the conversation. If this doesn't work for the society in which it's intended for, what can we do to improve it? And then that can be possibly worked on to what's called a measure, into legislation, and get put to Parliament. Whether Parliament passes it or not becomes another matter. But at least then you actually then can start having that discourse, rather than HMRC saying, as other tax administrations have done, saying, we'll come back to you on that. Because even if they don't, there could still be tax. That part sucks.
Yeah. I mean, could we kind of say that the guidance is, it's effectively HMRC's understanding of the law, right? They're trying to simplify things. They're trying to create some kind of abstraction that's easy to understand for anybody in the UK, right? Anybody can pick that up and start to understand their view on it.
That's fundamentally the approach with the guidance, which is exactly that, to whether it's DeFi or elsewhere. So you can actually read it and you can actually think, how does this actually apply to me? The challenge with DeFi was there's so many different terms and conditions that are actually being used by platforms that changed as well in the life cycle of the platform. Then you could have actually had a disposal of beneficial ownership under one terms and conditions that may not have actually happened later on. And that's where part of the challenge was. And that guidance, whilst it came out in February of 2022, had actually been worked on for some time during 2021 as well. It was a challenging topic because just as you start getting a handle on it, terms and conditions changed. The platform became a bit more popular, and you're like, okay, so how does this apply to this platform? And then it was a never-ending cycle of when do we ever publish on this? And as you know, the guidance actually includes quite a lot of examples, detailed examples, to try and help people understand how some of these really complex topics actually interplay for taxation.
So do we kind of agree that, maybe the DeFi guidance does suck, but at least we have the opportunity to maybe speak to HMRC, we can go through industry, we can go through lobbying efforts to get change, but at least we have that clarity, at least we have that foundation in order to push for change.
Yeah, I would say the DeFi guidance doesn't suck. It was actually quite well written, and we have had people from industry since that day. Actually, a person from a DeFi platform said that until they read the guidance and then they reflected, they thought, actually, you're right. One person said they really wanted us to get it wrong, but when they went through it, and again, this is their candid words, they thought actually we're correct in the views, and that's a challenge here. It shouldn't be the case that if it's not working to shout down why it's not working. It should be that point you said there. It should be used then as the framework to say, okay, this just gets really kind of complex, really difficult to implement for both the customer and for HMRC. We need to find a better option.
Yeah. And have any other jurisdictions released DeFi guidance, or was the UK the first and the only one?
No, Norway, as I said a moment ago, was the first, but theirs was very, very short, very in, very out, to beneficial ownership. Australia, the ATO have got close to it, I think, if I remember correctly, but very few have actually published a position on DeFi, and none to the level of depth that we did, that I've seen here.
Yeah. I know I said it sucks. It sucks from the perspective of the individual user creating taxable events, and I think the understanding. I do agree that if you read through that guidance, it's very hard to disagree with how it works from a beneficial ownership perspective. And I haven't spoken to a tax advisor that doesn't disagree with that, to be honest. So yeah, at least we've highlighted the challenge, and at least we can push for change.
I have to say, before the guidance came out, there was a newsletter that we did. It was written by the technical specialist who was working with on the DeFi guidance, and his knowledge of crypto is phenomenal as well. People don't think HMRC have got good understanding, but but his knowledge, you're nodding away because you know who I'm on about here, Dan. His knowledge of crypto is excellent. And by the time we sat there and gone through it, was just like a simple transaction. It's just disposals everywhere. It was horrendous. And even when I put that to a HMRC audience in a technical conference and said, how many disposals do we have here? Very few in the room got it right. And that was scary.
Yeah. And that highlights the challenge of the I suppose the entire market of crypto, right? Things move so quick, things are so innovative, that you've kind of got to like put your finger on the pulse somewhere, right? And say, we've got to produce guidance on this particular area of crypto, which may be relevant and may not be relevant by the time you actually put something out there, or something completely comes out of the blue, like NFTs or ICOs. So we've now got DeFi guidance. I presume we're going to see some NFT guidance and whatever comes next, right? Coming out of HMRC in the future.
There was space in the manual map when I left for the NFT guidance. I may have put a bit of a hole in some of the publishing plans, believe me.
Well, I won't push too hard on that to ask when they're coming or if they're coming, but it's obvious from looking at the guidance that there is more to come, and you've kind of framed that in a positive light, and that at least if there are negative aspects of that, we do actually have the opportunity to push for change. So I think in all, the guidance is a positive thing out there.
Yeah, you might not like the fact of paying tax, and again, who does like paying tax? But it's still much better to know you have tax to pay than having an investigation, an inquiry, and then finding you had tax to pay. Because again, even if HMRC hadn't put any guidance out, you still would have had a tax liability. The guidance did not create crypto tax. There is just tax and cryptos overlaid on it. Not that I'm picking holes in the title, obviously crypto tax sucks, but there's just it is just there is tax, and even if we had put guidance, again in 2018 when people saying, I can't believe this has come out, it was just actually the application of the law as it currently stood, and we were just helping people understand what that actually meant for them.
Yeah, cool. Yeah, I mean, this is a good segue right into the blog that you've just written for us, which is what to do if you are subject to having a brown letter drop on your doorstep. So maybe we could kind of go over the blog post that you've put together and what your aims were for that, because I think a lot of people in the industry, they kind of perceive HMRC as this like really heavy-handed actor that's going to make sure that you pay the maximum penalties and fines, and I think your blog post does kind of allude to, some fairness in there if maybe you haven't filed, and there may be some kind of leniency on penalties if your behaviour in answering their questions is sound, basically. Maybe if you come across as someone who's quite aggressive and you're not answering the right questions, then maybe that could go against you. But it'd be good to kind of go through why you put that together. And then maybe talk about HMRC's intentions as well, through the process.
Thank you, Dan. So, as you said today, on the Monday, the 6th, the blog went live, and there's a two-part. The first part is trying to, again, demystify a bit of HMRC. So what happens if you get that brown envelope? Unfortunately, we can never say how to avoid a brown envelope. Sometimes they will just happen. And sometimes you can actually, what you do next once the envelope arrives is the big trick. And it's easy, very easy to become almost paralyzed by fear with it and to ignore it and think it's going to go away. Well, obviously it won't, and the consequences will only ever escalate if you continue to ignore HMRC. But it's how to make sure you put yourself in a good position to actually answer HMRC if the envelope drops. And it's always better to plan for such events rather than try to deal with the fallout once it actually comes, because trying to get all your information together to calculate your tax liability, if indeed there is one, can actually take quite a length of time. So the idea of the blog, firstly, is then to educate, demystify, and also to tell the story of the person who's actually on the other side of the letter. Because quite often I don't think their story is ever told much, and There's a link to the Andersen blog where I also tell my story about my time in HMRC, which was 18 years in revenue and customs. So whilst I spent 4 of that dealing with crypto, I'd actually done aspects of the work like in the fraud investigation service, where dealt with what they call COP8 and COP9 inquiries. And the COP9 inquiries are where you've got serious investigation undergoing into those individuals. So, dealt with the whole spectrum of cases that are out there. And it has to be said that when you are going through the information, don't lie. The one policy I've said, to take one thing from the blog, is to tell the truth throughout. It's a bit of a fine line at times because you want to give the officer enough information to actually undertake their job. But if you just give them reams and reams of information that's just not relevant to the inquiry, well, that isn't quite as helpful either. They're not going to say, send it back and tell you off for it, but obviously what you want to do is make sure you get into the inquiry and you get out. No HMRC inquiry is ever quick. There's always time pressures and delays, and when you're working on the other side of HMRC, it's not necessarily resourced in terms of the workload. It's always a constant churn, and so they will have quite a significant workload on their other side to get through as well. So the better you can provide the information in a more concise manner, the quicker you can actually get yourself from one end of the inquiry to the other. And by all means, it is common for people to be worried about it if it's their first inquiry. And this is where professionals in the agent community, such as ourselves at Andersen, obviously, are there to help. Working through how to deal with HMRC can be tricky, can be challenging, and if it's your first time having to deal with them, then you're not, if not one blog post unfortunately alone is not going to give you sufficient insight, but it will give you enough to start with. But using agents who are used to dealing with HMRC will always make things much easier for yourselves too. And so fundamentally that's the blog. How to help yourself in an inquiry when HMRC comes calling, when that dreaded brown envelope lands.
Yeah, thank you for that. I think you mentioned some good points there. I mean, we've said on the podcast a few times, make sure that you are represented by an accountant that understands crypto. But I think you've also highlighted that you maybe want to be represented by, if you are under investigation or an inquiry, you want to be represented by an accountant that actually understands and, whose day job is representing people in these situations. Because there are different types of accountant out there. There are some that would, as part of their day job, they're probably never interacting with HMRC, whereas others may be doing that day in, day out. So I think you raised an important point there in finding the right representation to help you through the process. But can we talk about how you would end up getting an inquiry? If I filed and I believe that I filed everything correctly, could I still end up with an inquiry from HMRC?
Absolutely,
okay.
You can still end up with an inquiry. So there's a great big sausage machine in the background, which I'm not going to go into lots of detail about, but you could have other aspects of your tax affairs that have come up that may actually be prompting that. You putting your return in might be part and parcel of a wider check on particular aspects. There are what's called test and learn activities where they may identify a particular risk and then they will open a small amount of cases to test whether or not that risk actually turns out to be true or not. So you could become part of a control group within there. You've also got the great nudge letters, which some people always forget or class as being part of an inquiry. So sometimes you'll get a letter from HMRC, what's called a nudge letter, which is meant to be more of an educational prompt. And so we did the crypto nudge letters in December 21, I want to say. And our whole aspect of those was actually part of that educational piece that you were saying before, Dan, because we identified people who had crypto and actually trying to get out there and trying to dispel some of the what I call the three main misconceptions that exist when people actually have crypto. And so that is what that whole nudge letter was actually all about. It was not about, and I've seen some great posts on the various different forums, like on Discord and so forth, where people are saying that, oh, HMRC is after me again. And it's just like, no, actually, on this, HMRC is trying to help. Not everything that HMRC does, and it comes back to your point earlier about being heavy-handed, not everything that HMRC does is there to punish. A lot of the time, in fact, a vast majority of the time, what HMRC wants to do is wants to help people get it right before they file. If you get it right before you file, then it makes it easier for yourself and it actually makes it easier on HMRC. Undertaking an inquiry takes significant resources, and if people can actually get it right first time, then that is the goal, that's the ambition. It's not to say that obviously anything you send in will get accepted, because there has to be those checks and balances, and there has to be, should we say, I don't want to say threat because that sounds the wrong word, but I think it comes across in that way. That threat of inquiry that don't do it right, then HMRC will come after you. But even if you are in an inquiry, what it all comes down to at the end of the day, if you have got it wrong, it comes down to what they call customer behaviours with the penalties. And you may have heard a lot about customer behaviours that you may have not realised in the news recently with certain ministers. So there's basically 4 bands of penalties that can get applied: deliberate and concealed, deliberate, careless, mistake despite taking reasonable care. And obviously, as it sounds like from the top end, deliberate and concealed, you'll get a far higher penalty, which can be, particularly if you have international aspects to your tax return, can be up to like 200% of the tax that's been that hasn't been paid. But if you take a mistake despite taking reasonable care, then no penalties would get applied, because despite the fact you have got it wrong, you have taken reasonable care. And I think that's quite key and critical when we actually then talk about the heavy-handed nature of HMRC. I have done penalties which have been deliberate and concealed, and I have done cases which have finished with being mistake despite taking reasonable care. It's not, you won't look at them and say, I want this one to be deliberate and concealed, because it all depends upon the facts and what the customer's actually done. And in many ways, again, this is where professional agents can actually help you navigate through the process, because it can actually help you understand as to how the information should be put to HMRC in a way that actually makes sense to HMRC, as well as makes sense for what the client's actually done. Because again, sometimes you can feel that you've done wrong because that letter has fallen on your doorstep. Instantly you're going to think, oh no, yeah, something's wrong here. But it might not necessarily be the case.
Yeah, I mean, we kind of see these inquiry letters intensifying over the last couple of years since we've been in business, particularly this year. I think we've done probably over 10 now, supported individuals, helping them get their data together. So I think all of this kind of comes down to really, do you want to sleep at night, is what we've talked about on the podcast. I'm very much of the opinion, I want to stay out of any kind of brown letters, any kind of letters backwards and forwards. I don't want the stress of it all. And that's one of the justifications why we built Recap. We want to get all your records in order. We want to kind of remove the disconnect between your tax position and your actual trading position. And when you're on top of your tax position, rather than retrospectively trying to get on top of it, you're actually in a better situation, because you can understand things like your allowances. You can you've got the opportunity to optimize things, time things the right way. And I think that, again, a lot of this comes down to education. A lot of people treat tax as kind of like this thing that you do once a year. Maybe you do it in January, much to the discontent of your accountant. But if you do get on top of it and you do kind of get into this mindset of it's something that you should be on top of at all times, you can actually benefit, right? You can benefit by understanding timing, using your allowances. So do you think that HMRC have got a role to play in, it's quite a bold on this, but in promoting crypto tax software as such? Because there are other kind of areas of accounting in business that where certain software is promoted in certain ways. Do you believe there's a responsibility of HMRC to maybe promote crypto tax software?
Yeah, it's a challenging one. It's actually one which I was also dealing with just before I left. So there was plans in place, but I'm not too sure what happened to them. Anyway, there is an aspect of trying to help promote crypto software. But part of the challenge that HMRC often has is whether or not people may think then that if you be promoted by HMRC, that the software is going to be correct. And I think we can agree, without going into too much detail, that perhaps not all software is created equally with crypto. And so it wouldn't necessarily be fair for HMRC to also treat it in that way either. There's a whole risk there. So when some different software packages are actually promoted, the HMRC might actually own the code behind that, and then different software platforms can use that to plug into to create the result, which isn't the case with the crypto software. So I think that's where some of the challenges are, and HMRC must be, understandably, has to be commercially neutral. It can't favour particular parties over, to the detriment of others. It has to be that neutral player in the market. Otherwise, it just creates an inequity, which I'm sure you'd feel if one of your competitors had got highlighted and promoted heavily whilst you weren't.
Yeah, absolutely. Yeah, it's a challenge. It's a challenge. I'm just thinking of ways that we can software is probably the number one way that you can help educate people. If you get that in front of people, you have a great user experience in there. We can educate people around taxable events. Probably better than any kind of YouTube video or HMRC guidance. It's just how do we get to them?
The challenge I think you'll have here is reading the guidance and reading a YouTube video is not actually going to give you a return to provide to HMRC if that envelope comes, or when you have to declare your liabilities. You've still got to do the hard work. You've still got to do the graft to actually get the final figures at the end. And this is where software comes very much into the fore, because then that makes it all easily to do. Once that brown envelope arrives, there is a clock. They start ticking because they want a response by a certain day. If you don't reply by a certain day, then you can get what's called an information notice. And then if you don't respond to the information notice, then you can start getting penalties charged to you for not replying to the information notice on time. Obviously, if there's reasons why you can't respond, you have to speak to the officer that's, the HMRC officer that's in charge of your inquiry, because then they may be able to give you extensions. I'll quickly add that. But if you've already got the information to hand, then as soon as that envelope arrives, then you can pretty much send it all off, and then they can get on with doing with whatever they want to do. It is that helping you sleep at night. It is that reducing that stress upon yourself. It is that making sure that you are doing everything that you are obviously legally allowed to do to minimize your tax burden.
Yeah, sure. So one thing that I thought would be good to cover is CARF. And I know this is something that you've been involved with. Could you just give a quick introduction to what CARF is and how it's going to be effectively shaking up crypto tax in the UK and other jurisdictions?
Okay, so CARF is the Crypto Asset Reporting Framework. And it's a framework at the moment, so we see how it actually, if it gets ratified, because it's coming from the OECD, the Organisation of Economic Cooperation and Development. And yes, I was part of the negotiating party with the OECD, representing HMRC in the UK in the discussions. And CARF will be a significant change to the information that's going to become available for HMRC. Currently, information that is available will become hugely, should we say, enriched with additional information that will actually then start coming from the countries that agree to join the standard. A similar type of agreement is the Common Reporting Standard, or CRS. And under CRS, about 100 jurisdictions have actually signed up for an automatic exchange of information between each other on information held by foreign individuals at their financial institutions. So that means that your Canadian bank account is actually known to HMRC already, because the Canadian Revenue Authority will already be providing information to HMRC. Now, if you have then an exchange, which was considered to be a reporting crypto asset service provider, or an RCASP, within the agreement, and let's say that's also in Canada, then that would also be caught by CARF when it's ratified, and then the Canadian exchange will also then provide your crypto information to HMRC as well. And so what you'll see then, if it gets ratified to the same level of CRS, and the OECD did bring this in as a possible threat to CRS, because obviously then it becomes a lot easier to jump out of your bank account and to set up a crypto one, that was part of their concern, then you can just circumvent the rationale for CRS. And if as many jurisdictions sign up to it as with CRS, then we are talking about a significant amount of information that has been provided to HMRC. And I have to highlight very quickly that information is already going to be coming from foreign authorities to HMRC as currently stands under existing tax treaties. So CARF is a huge simplification, huge enrichment of the information, but information has already been received into HMRC.
Okay. So we can kind of speculate as to, if this does get ratified, or even the state of the market as it is, right? Things will probably intensify as crypto assets become more mainstream in the future.
Quite possibly. It's always hard to predict the future, but it will provide a lot more information than currently available to HMRC. But this, again, $100 up to it. It'd be a similar kind impact as to the CRS implementation, which was quite significant in terms of HMRC's operational capability.
So again, going back to sleeping at night, knowing that these frameworks are being talked about on a global stage, perhaps maybe you haven't filed, maybe you should now, maybe you filed inaccurately, maybe you should refile, maybe you should address these things before they become a bigger problem.
Always before is the best plan, yes. It's much easier to sleep at night if you already know everything's already in order. You have the information that's necessary. And again, as you alluded to earlier, Dan, it's actually then making sure that you are in the best financial tax shape possible as well. It is complex, it is, and it is making sure that, it's you're in a good place.
Yeah, I mean, I was actually talking to a client about much of this last week, actually. And, we were kind of saying that, crypto potentially has, the capabilities of generational wealth. It's like investing in the early internet. If you had Google or Amazon stock in the early days, you could create generational wealth. And I think we're kind of playing in the same territory. And you want to make sure that you're probably paying your taxes right at the moment, because if you've got a big fine to pay, you're going to impact at this time of opportunity, you're going to impact your ability to generate generational wealth. And I think it's also important to highlight that with your crypto taxes, there's probably, to get on top of everything can be quite painful if you've been doing a lot of activity. But once you have got on top of it, you can kind of just be proactive, moving forward. It's not something that you're going to have to visit for hours on end every year. So you've just got to put the work in to get up to speed, get your cost basis sorted, get filing, and then from then on, everything should be quite straightforward moving forward.
Yeah, absolutely. And we, just quickly to highlight the three main misconceptions as well, because that might resonate. Because if you've just bought your crypto and you've held it, because let's face it, last year's not been the best year for selling crypto. So if you have just bought and held, and so you've bought Bitcoin and you've just kept that Bitcoin, then you wouldn't actually have a tax liability to worry about. If, however, you have bought Bitcoin and then you've sold it for ETH or XRP or anything else, or worst case scenario, FTT. So if you've actually bought anything else there, then that would be considered to be a taxable event, because then that's going from one asset to a different asset. So that would be chargeable. If you've done that, and then you're thinking, but I haven't actually taken the money out of the exchange, that's irrelevant to the establishment of whether you actually have a tax position. So just because none of the money has been taken away from the exchange where that's been done, doesn't make it any less taxable. If you've also been using, let's say, a crypto-backed card, credit card, to go and purchase a coffee or whatever, that would also be considered to be a disposal, because at that point you're selling your crypto. Fundamentally, it's getting converted into fiat, so it is a disposal, and so that would be a generation of a tax event as well. And these are matters that were actually highlighted in HMRC's market research, and things which I have seen since 2018, reoccurring themes here, where people continue to not quite understand some of the main small things that get wrong. And so you might actually think your affairs are in order, but you might want to check that, again, going through some of the software, because there might be aspects there that you didn't realize you were getting wrong as well. So you might want to almost use it as a health check, and again, make sure your affairs are correct.
Yeah. Some interesting points in there. I think the one that we see a lot is, if you haven't withdrawn it to your bank account, then you don't think that you have tax to pay. I think that's probably the most common misconception that we have to deal with on frontline support, at least. I think it's interesting what you said. If you hold, you don't have to do anything. There's no tax to pay. There's no taxable events, and that's something that I want to really push to people. If you're finding it difficult to keep on top of your taxes and you believe this is an opportunity for generational wealth, maybe don't throw things into DeFi products. Don't kind of throw things between different assets and swapping between the assets all of the time. Yes, you might be making profits from doing those activities, but then if you consider the time aspect and your record keeping on top of all of that, is that any better than just holding for the long term? And I think history kind of shows you if you invest and you make a long term play, you typically always end up beating the people that are making the short term plays in the future, and that may simplify your tax position. Sorry, Dion.
So I was going to say, isn't that the Warren Buffett approach? Buy and hold.
The Warren Buffett approach. Buy and hold. Yeah. Buy and hold. And it's the original Bitcoin approach, right? Take yourself out of all of the headaches, lock it away, don't access it, forget about it, and then think about it in 10 years' time, and it's either going to be worth a lot or zero.
I'm just thinking about the value of Bitcoin in 2013, which was, I think, about $20 at that point. Because even now, with the way Bitcoin's taken a bit of a pounding, and since the all-time peak of $64,000, even now you'd still be very much in gains territory, wouldn't you? So, yeah, maybe. And I think this is also what you're pointing at. One of the challenges, which I certainly found at HMRC, was the complexity in which these products actually make it really hard to deal with from a bespoke tax legislative process. So as soon as you almost have one aspect, should we say, dealt with, something else comes along that's so completely different. Each year has had a relative flavour, if you will. So 2017, we had the boom year. 2018 was not the first crypto winter, but obviously quite a crypto. Sorry, 2019. So 2018 we had the ICOs, the initial coin offerings. 2019 then we had the winter. 2020 we had the DeFi boom from the summertime, and then the following year we had NFTs hugely taking off. Last year was a bit more of a winter year. I think it was almost like an ice age last year, but definitely a retraction in the market. So we might see another boom type year this year. But with each of those products, so ICOs are very different to DeFi, and obviously DeFi lending has been around for some time. But when I talk here, I talk about the mass adoption, because obviously NFTs didn't just come into existence when they became popular, because obviously CryptoKitties have been around for much longer, but some point become really, really popular, and they come then into the public consciousness much more, and then that kind of feeds into the boom. But what you would have with the legislative approach, if you wanted to make something bespoke, even if you had got something bespoke for ICOs, it would not be helpful for DeFi. If you had got something bespoke for DeFi, it wouldn't necessarily be helping your NFTs. And this is part of the problem with the way that the law works, is if you can define something, then it's quite easy in the crypto space for someone to then go and do it. So that quite no longer follows that definition, or do it something in a completely different way. And that also leads to a lot of the challenge for authorities to actually provide certainty. And the more these things change, the more certainty I would think people would want. Again, market research said about 10% of the adult population own or had owned crypto assets. We can only expect that figure to have actually grown, so hopefully grown. And so the more people who become involved, actually, if you wanted to get to that level of mainstream adoption, at some point maybe innovation needs to slow down a pace, or innovating in a way that's helpful for authorities. I'm not too sure how that actually works, as I say it out loud, but it's again challenge for HMRC caseworkers. So this brand new thing comes out, and then you're trying to explain it to HMRC, whether it's on the core lines or not. I do remember an excerpt I overheard from a call handler where someone was trying to explain to them about they'd had a token that had forked, and they wanted to know what to do, and the core handler said cutlery wasn't chargeable. So they're thinking normal fork, and the obviously the person calling in is talking about a blockchain fork. Completely different world. And this is again where the education becomes really difficult in an industry that almost demands 24/7 attention to keep up with the developments.
Yeah, I've often mentioned this. We work in the industry, right? Well, we both do, and it's impossible to stay on top of everything. Yeah. I'll openly admit NFTs completely passed me by when they came to the market, and I'd like to think that I'm somebody who's quite involved, always on Reddit, always on Discord. I completely dismissed them, and all of a sudden there was a major asset class that came about.
Yeah. At the beginning of the year, for the NFT year, people were saying to me in HMRC, "What do you think is going to be the big thing?" Did not call NFTs at all. And for the DeFi year, I ended up having to really eat my hat with the OECD Secretariat, because we've been talking about DeFi earlier in the year, and I said I don't see that taking off. I wouldn't worry too much about it, but by the July, that was really starting to take off, and by the end of the year, it's like, yeah, well, let's call that one. It's so hard to know what comes next.
Yeah. And, is this like, if this was a new technology that was impacting regulation, we might end up with like a sandbox, a place for us to do business where, the authorities kind of know that it's impossible to stay on top of the innovation. So they create a sandbox around this stuff. Now, is there an opportunity to do something similar from a tax perspective, while the market's young and the market's still evolving, until we understand exactly where this is going?
No, not practically speaking, I'm afraid. You can, if there is an uncertainty, you can request a non-statutory clearance if you can show where the material uncertainty actually lies. But there is a subtle difference between the way tax works and the way regulations work. So regulations fundamentally don't come into effect until they come into effect. But as I said earlier, this is the application of tax laws that currently exist. So what you would be almost looking for there is some form of derogation from existing law, which would need some form of extra statutory concession, which Parliament isn't too keen on these days. So there needs to be a lot of extra statutory concessions to say, we're ignoring the law on this specific purpose. To say you're ignoring the law for crypto would be, I think, very hard to get past Parliament. Because again, as much as you say you'd like X, Y, and Z to make the law change, that comes down to Parliament's decision. It's not just something that HMRC can just do. And again, you can't even create law, you can't even create tax obligations by writing guidance. Guidance is just the understanding of the law as it currently stands. If you want to change that, so you mentioned earlier about beneficial ownership, you couldn't just change the definition of what beneficial ownership is, because that's more of a common law concept that's been around for quite some time. It's not a tax definition that could be altered, and even if it was, that would have to go past Parliament to get the law changed onto the statute book. HMRC implements the law, doesn't create the law. Has a role to play in creating it, but can't just create it out of thin air. And unfortunately, I think what we've seen from a lot of the debate at the moment, from the likes of the Parliamentary Accounts Committee, the recent Westminster Hall debate, I think there is and obviously the updated corporate evidence consultation document that came out last week from Treasury as well, about future regulatory approaches for crypto. I think there's still a lot of uncertainty as to how crypto is developing and what to do for the best. So unfortunately, the idea of a sandbox would be very hard operationally to actually do.
Yeah, I mean, you could argue at the moment that your own personal sandbox is the capital allowance that you've got. The 12,300 capital gains allowance, right? A lot of people that have got very basic activity can have a play around in the market. They can calculate their taxes, and if they're under that threshold, they've got nothing to pay. But those capital allowances are reducing quite quickly, and are going to be reducing year on year. So we're going to see a lot more people brought into the scope of taxation moving forward. And again, people that were probably going to need software, people that are probably going to need to keep on top of things when they never needed to before, which I think is probably a risk for the industry, right? It's bringing a whole new cohort of people into the scope of filing a self-assessment return every year.
Absolutely. Now, this was one of the, I suppose, challenges, you could say, if you will, previously, because until you'd actually gone past the annual exempt allowance, the AEA, you didn't actually have any taxable events to really worry about. But you'd have to do your full calculations to establish that. Yeah. So you could have thousands and thousands of transactions. You could go through all of that, and you could find there's actually no tax liability. That's also part of the challenge from a HMRC perspective, if you will, because if you just provided to HMRC a big spreadsheet of your transactions that you've undertaken, they would also want to make sure that there is a potential, should we say, for revenue to come in, because they're still very minded that it's all about risk to resource, that if there's a low risk, they don't want to be applying resource to that matter. Again, this is where the nudge letters come into effect, where you really want to help educate people to get it right. As you say, that 12,000, which I personally thought was quite generous for the AEA allowance, and did actually take quite a few people out of the tax net. If you look again, market research showed a lot of people were below that type of threshold. But as you say, with that threshold coming down, and again, to highlight the importance of working with professionals in the industry, because if you have been just doing PAYE, you may not even be aware of one filing, 2, the annual exempt allowance, and 3, the changes to coming to the annual exempt allowance. It's very hard to keep on top of tax. It's quite a full topic.
Yeah. Cool. So I think we're. Go on, Dan.
Right. I was going to say
we're talking over each other.
Absolutely. It just shows it's live and we're just chatting away. But when you overload crypto and tax, it does become even more complex. There are other levels of uncertainty. There are aspects that haven't been written about in the HMRC guidance. So to give you a determinative effect of what happens in certain situations. And that creates uncertainty for individuals as to what should be the correct filing position, which again is the importance of actually making sure you have taken professional advice, because then that does start to become a big difference between being careless and taking mistakes despite taking care. If you have just not actually sought any advice to get your affairs correct, then the HMRC officer will be struggling to say you have taken reasonable care if you've just not bothered.
Good points there. Good points. I want to finish on a high, if you like. We've had some good news from the government, right? That they've got ambitions for the UK to be a crypto hub, and we're seeing things hit Parliament at the moment, and we're kind of seeing regulatory barriers perhaps coming down in the UK. So do you believe that the UK can become a crypto hub and a kind of like a one of the major jurisdictions for crypto asset companies in the future?
I would like to believe so. I really would. For the UK, we've often been an innovative country. I know it's not really a financial product; it's financial producty in nature, and we've often tried to lead the way in financials, in technology, fintech versus tech fin. We can obviously debate about another day, but it would be great for the UK to take steps ahead. I'm not too sure quite how quickly we're progressing on that, and again, part of the challenge does remain education, but not just education of individuals this time, but education of ministers, education of those that create the laws and the regulations. It's one thing for HMRC to, should we say, be fully educated on crypto, but anything that goes through will have to go through with the oversight of Parliament. And if there is that reticence for crypto to be taken on board, because unfortunately some of the more recent news, obviously with FTX, for example, and Celsius, have not played well for the crypto industry in that sense. And that's just a realistic view of the matter. That's not to say that it's going to necessarily prevent the adoption or it's going to prevent crypto becoming a hub. And already, if you look at the Chain Analysis Geography report, the UK was already leading in Western Europe anyway in terms of the level of crypto adoption for, and this is in the report they released last year in 2022. So the UK was already firmly showing it is taking the lead in Europe. It's how does it maintain that lead? How does it go forward? And to some extent, I think it has to be a cautious approach. To some extent, it's got to be careful not to go faster and break stuff at the same time, because there is a hard fought position for the UK to be seen in such a positive manner. There's a lot to lose and there's a lot to gain.
Yeah, we've recently just released our own report actually, that puts London at the top of the list as the top city in the world for crypto, and that involves things like quality of life index, the number of businesses there are operating here, the number of jobs available. We definitely look like we're on top, but a close second is Dubai, and after that there's then New York. We're in a very competitive environment at the moment, and I think jurisdictions are looking to capitalize on effectively being that crypto asset capital. And like you say, timing is probably the critical factor in all of this moving forward. So hopefully we can move fast.
But that's a great point that you raised there, is the other jurisdictions are really starting to catch up. And it is the regulatory environment has also made it difficult for firms to register here. I don't think we really need to go into depth about the often cited issues of regulation with the FCA, where people have struggled to get the necessary permissions under the Fifth Money Laundering Directive regs to operate from the UK as a CASP/FAST, depending which definition you want to use for that purpose. So I think that is proving to be part of the challenge. It was promising to see the paper from Treasury last week. It did look well thought out to me. They did cover a lot of the key aspects, but I think some of this then still comes down to how will that actually be operated by the FCA when it actually comes to implementation. If we could have the best regs in the world, but if we're still struggling to get people through the money laundering regs, let alone these additional money laundering registration, and then we've got these additional regulations on top, what kind of burden does that actually put upon businesses to actually get this done? And I think this is the real challenge, the real issue, where businesses are then having to say, okay, we can't get regulated, we can't get registration under 5 MOD here in the UK. So where do we go for a regulatory structure, a regulatory framework that is a bit more crypto positive? And that's definitely where it seems to be other jurisdictions are really starting to make their mark. And I have difficulty here because I understand how hard it can be for the policymakers and for the ministerial perspective when they think, well, they don't want to they don't want to degrade regulations in their mind to allow more firms to join. But this is again where potentially it's possibly an educational barrier, that they think that they read the headlines, they see the issues of FTX and think all crypto firms are on those minds, which obviously isn't necessarily the case. So how do we encourage those people that actually it's not as terrifying as they may think?
Yeah, cool. Comes back to education again, round in circles. Cool. Well, thank you very much for your time on the podcast. We're now going to call it a day because we're up to 50 minutes. But again, thank you, Dion, for joining us. And where can people find you if they want to get in touch?
Read the blog. We've got links to Andersen in the UK. So Andersen in the UK, we're actually quite a unique team. So we have specialists across all aspects, or whether it's private client or international corporation for structures, as we mentioned a moment ago. We are, I think, personally speaking, and I may be slightly biased, I think we're the best balanced team as well, with unparalleled crypto understanding and with tax to boot.
Thank you very much for that. Cool. Thank you, Dion.